the Feds have increased interest rates again. What is this going to do to buyers?
Hey everyone, we're the Hutch Homes Group. Thank you for joining us on our Monday market update. Before we get into our hot topic, remember to like and subscribe if you are enjoying what you're seeing every week. So yes, as John said, the Feds increased the rates again, and that can really put people in a tailspin. Oh my gosh, like mortgage rates are going up again, like it's already so high. So what does this really mean? Let's talk about it.
Wow, amazingly enough, interest rates came down for mortgages. A smidgen, but yeah, interest rates, you can get a mortgage for 5.4% right now, depending on your credit score and the type of loan, and we can still get loans, different types of loans, for less than 4%. So it's not all doom and gloom.
Yeah, they're not directly correlated, right?
Mm-hmm.
Yeah, one of our lender partners made the point that this most recent hike isn't affecting mortgage rates, because I think a lot of people think that the federal rate hikes affect the interest rate for mortgages as well. And while they do have some correlations, they don't directly affect one another. And so this rate hike is going to be more effective. Like, it's going to affect people applying for new car loans or new credit cards or lines of consumer credit like that. So it's important to remember that.
So what does it mean for home buyers? Well, there's actually 45% more active listings than pending listings this last week. So more inventory, and also a little bit more room for negotiations, for potential negotiations for things like repairs or maybe even closing costs. I know I had a client who just closed, who had his closing costs covered and got in for pretty much just his inspection fees. But interest rates could go up again come September. So make a move.
How did you put it, John? Make
hay while the sun shines.
Make hay while the sun shines.
Indeed. So the affordability issue, that has been like the hot topic too. Like, that's really been what's the fear of the interest rates increasing. So we've talked about this a bit, but let's really look at, okay, so if you bought a house at 3.5% in the height of the market when things were nuts. I mean, I had buyers that standard every single house they were writing offers on were going 75, 100 over list price, right? So you spent that money over list price, but your mortgage payment was affordable, so you felt okay holding on to it. So now here we are at 5.5, but if you're not having to go 100% over list price, that really does affect your affordability positively, because what's happening right now, and I just kind of discovered this firsthand because I'm buying a second home right now, and my lender is saying, like, I'm paying a fee for my interest rate, even a higher interest rate. I'm paying for it. Why am I paying for it? Well, because the mortgage lenders are like anticipating, they're betting that interest rates will go down in the future, maybe not tomorrow, right? But maybe in a year, 2 years. And then that means that they're going to get a rush of refinances again. That did happen in, what was it, like 2020, where people were refinancing after only a year of home ownership. So lenders don't make any money. Actually, like it kind of screws the lender a bit. And so they're you're paying for that up front right now. But that to me means that, okay, well, lenders are betting that the interest rates will go down because they're charging me for it right now.
Yeah. Then
what happens is I'm paying a little bit more, which is painful, but I didn't have to go 100 over. Actually, I went under list price for my purchase. So I'm making up for it there. I hope that you see that train of thought.
Yeah, totally.
And then when the interest rates go down in a few years, you refi.
Yeah. I mean, that's a good point though, like, because in this also talking about that affordability factor and the competition in this recent past market, it's the low down payment buyers or buyers that had, very like an FHA loan or VA loans was very little down payment, were getting beat out. It was extremely difficult for them to get into a home because they were up against people with 10 or 20 or 50% cash down. But now those buyers are able to get into a home. So like, it's a really good window of opportunity. But it is important for buyers to remember to like have proper expectations, because with the higher interest rates, yes, that is going to affect what you can shop for and where you can shop for it. So reach out and we can talk about how that will affect what and where you're looking at.
And make hay while the sun shines.
Especially those low down. I mean, that is a huge trend right now. So not to be skipped over. If you can get into a house for 0% down, that it was not happening in the last market. So that's awesome.
There's more opportunity for buyers, and sellers are more motivated out there. So hopefully this made sense. Just remember, like, Fed rate hikes do not necessarily mean mortgage rate hikes. Bottom line.
Reach out to us today. Send us your articles that you see that you want us to break down, and we'll see you next week on our Monday market update.
The Feds have reduced interest rates.
You did delay that.
I can see the screen.
Why did the king over here?
Oh my God.